Wednesday, July 17th, market analysis, Stan Ehrlich. I start out with indexes, go to futures, and today I've got Bitcoin. So that's my last chart. Now, yesterday I spent quite a bit of time on the stock market indexes for a reason. And I have been pointing out for the last several days and even longer and off and on, and so far not very correct, sort of wrong or wrong, but right for a bit for the last couple of months because of sell signals. Now we have this 90 level that I outlined a couple of days ago on my RSI charts, and very overbought. That's why, reaching close to 90 or even over, and a variety of other indicators that are causing me to continue to say the same thing. Basically, I think this market's ready for a big correction. Today looks like the beginning. Actually, yesterday, and it didn't look like it, but it, some cases, was the high day. But today it's fairly obvious. We are now lower by a long shot than the last couple of days worth of lows. We're going to get into the details in a moment. The S&P 500 E-mini has its first modest downside objective here at 55.90, let's call it, give or take a little. And it could even be reached today, but very soon, maybe very well this week. This thing looks like, these indexes look like they are breaking out to the downside in a variety of ways, and I'll get to the details. Now, the next downside objective, which I think is going to be easily reached, is 55.03. Call it 55 flat. The next one is fairly significant and profound at 54.18-ish. That's the middle of it. It's around the highs in late March and a variety of highs in May, and showed some support after getting above it in, looks like early June. So that's my first decent downside objective, which I would expect to be oversold in and bounce out of for maybe a week or two or something. And it's going to take 2 or 3 weeks to get down there, if I'm right. But I don't think that's going to stop it. Then I'm looking for lower lows after that. And we're now talking 6 weeks, and we're getting close to October. So that's the end of August. Now you're getting into September, but September and August, September, usually September, is the beginning of a big down move into the month of October, the October lows. I've been talking about this now for a week or so. Oh, since 1997, I believe. I might be off 1 year. It's been over 90% of the time that we have had a significant buying opportunity in the month of October. And sometimes they are hugely profound, like October 13th of 22, the beginning of the new bull market we are still in, and the end of that 1 year bear market. Great buy signal. I screamed bloody murder on that day on my YouTubes. Go back and look at it and listen. Now, and I'm getting longer term commentary, obviously, because of the situation. That level of 54.20-ish, 54.15, whatever, is going to cause a bounce. And the longest, biggest break I can expect that I think is possible, although I'm not very sure about it, getting all the way back down to 49.60. That was the area of trading in December, January that I talked about back in March and April and May. So there's still a chance of that, but I'm going to pass on expecting that at this particular point. I really want it to get down to, and I'll feel real good about it if it does, because of my forecast of 54.15, give or take. Okay, let's look at the 1 minute. It's just breaking down constantly. This market is not going down like a exhaustion weakness phase, which collapses very hard and panicky. This thing is chewing its way down, but fast and consistently today. It did not, unfortunately, get above yesterday's high in the E-mini. Therefore, we're not having any bearish engulfing daily data signals, which would lead, of course, to the 1 minute. But nevertheless, it's coming true, so to speak. And I think this is the first 5-10% of the move down. Spider gapped down. That's a breakaway gap to the downside, I believe. You don't know about that for sure until what? Weeks, months, a big move down from now, or both? But it looks like it's exactly at the right spot. I've seen a lot of them. First move to the downside on the SPY 55, 555. Now, the next one down, I think, is very likely is around 550 for the SPY. I don't think that's necessarily going to stop it, but remember, I think that might be where we're going to have our first decent bounce. And then there's another level, 542.75, but there's an old gap to close, and that's at 537. And I do expect it to get there. I'm just trying to help you as far as the bounces on the way down is concerned. And lower, let's just say. Spider, 1 minute. There's your big opening, 6:30 California time, downside gap because the E-mini had already been down quite a bit by then. And it's just dropping. First bounce might be at 555, as I said. What about the QQQs? Now, remember, the NASDAQ in general, I believe, is going to be leading the way down. And I've said that for several days now, making lower lows quicker and going down faster and staying down more easily than the other indexes will bounce percentage-wise, that kind of thing. Big down gap in the QQQs this morning, breakaway gap, if you want to call it that, because of the 6 or 7 days that it was opening below the lows of. So there's a gap in the QQQs, and I know gaps are almost always filled, but breakaway gaps are the kind of a gap that is the least likely to get filled. So I'm thinking this one just might not get filled. I think this is a great situation I've been talking about for a week or more. Okay, we're almost low and last at the moment. We've already broken one little support on the gap down this morning. So the next stop might be 473. And there's a gap underneath that, like the spider, at 468.5. So that is a good chance soon. A week, 2. But my real support is back down here at 450. And maybe even lower. But let's see what the next few days bring. QQQ. Looking for that gap to get closed. Maybe it's a breakaway gap. The yellow line is simply the previous low in the last 6 or 7 days. Down we go. Now, the NASDAQ futures. We have an official ER sell signal on the exact high day. You've seen it if you've been watching me. We had an ER1 short sale scalp on that day, made money. ER1 overnight that didn't stay overnight because of the size of the break I'll show you in a moment. Made money. We had an ER3 fill the next day, relatively close to the high, not as close as I'd like, but close enough. And it made money. And we are still holding the ER3 overnight, low and last, great trade. Stop is coming down way below where we got short. Love it. This is the perfect, what should I say, perfect storm, perfect entry with my strategy and follow-throughs. I couldn't ask for too much more. So the NASDAQ, where is it going? I think 19,731. Give or take, of course, a little always. And then probably down to, and I don't have a line here. Let me put one in real quick across this range. Okay. Then right around 19,300. But lower still, I believe, is likely. So that's interesting. They're about the same distances apart. Significantly lower. Let's look at the 1 minute chart. And it's not the 1 minute. I've chosen a 5 minute chart for today because I wanted you to see the ER1 scalping overnight on the day of the signal, got short right about there, and got out down here. That's 2 trades. A scalp and an overnight that didn't stay overnight, again, because of the size of the break that happened on that day, and then the bounce. The next day, we ran up and got short at my trigger line for ER3. Not quite as close to the high as I'd like, but good. Gave me a little trouble. Next day gave me more trouble, but didn't get stopped out. Started to move down. We are still short. That's our stop now, and it's all automated ER signals. Go to ersignals.com. I love it. I can't say I'm bubbling over this morning. It's just great. NASDAQ, Dow Jones. Now, this is like a paradigm shift. I don't remember ever seeing, in 53 years in this industry, watching charts all the time, starting as a runner on the floor of the Board of Trade and Mercantile Exchange, commodity broker, give or take 30, 35 years, president of forex firm, hedge fund manager, wrote 5 different technical market letters along with brokering for Robert Prechter, the Elliott wave theorist. Dan Zanger wrote a letter, the Ehrlich report, next to the Zanger report for 3 3/4 years, and on and on and on and on. And teaching for Online Trading Academy around the world for a few years. Okay, enough. CNBC, okay, enough. Seeing the Dow Jones go straight up while the exact opposite happens on the NASDAQ. Now, I remember in the last half of 1999, the NASDAQ actually doubled in value. If those youngins here don't know that. The last half of 1999, the NASDAQ index at the time totally doubled in value in 6 months. It's true. Check it out yourself. Don't believe it, I tell you. So I'm not sure about this, except for saying on the Dow Jones independently, way overbought. That is a 93. So I'm expecting it to top out any damn second, so to speak. Today, tomorrow, real soon. And maybe around where it's at, but it could pop up a bit more in the meantime. But the amount of time left before it turns down, I think, is very little. The amount of rally you get on these quote unquote blow off tops is very difficult to predict. So amount of move up yet, not quite sure. Okay, the 1 minute chart on the YM, slowing down a little bit, looks like, but still no evidence of it turning. Okay, the Russell is basically the same, except the Russell made new highs for the whole trend and new highs for 2.5 years or so this morning, and is now near its lows and lower than where it closed yesterday. So it is reversing, so to speak. Now, I don't believe much in these standard reversals, higher high and a lower close, but bearish engulfings seem to be very out of reach for the Russell because of how much it has to move down below yesterday's lows to get that bearish engulfing. If it happens, the other indexes probably will be nosediving twice as much as they are down right now for some reason. And wow, what a huge signal I would get, but I don't expect that. I just think maybe it's rolling over. So the only one left to roll over is the Dow. Here's a 5-minute chart on the Russell, and it closed near its high at its high yesterday. My old friend George Lane, Mr. Stochastic, once taught me that's why stochastics works so well, like RSI, similar. Markets tend to close at the higher highs, at close to their highs or at their highs, just before they go, uh-oh, and roll over and turn down. All right, bonds. At resistance, having a little trouble, been sitting around here pretty much all day. I looked at it 4, 5, 6, 10 times earlier. Notes, kind of the same thing, but I like the bonds because they're in some resistance, and this would be a good spot for it to roll back down. Now, normally the stock market goes down when bonds go down, so this, if I'm right about bonds, may even help the other markets work lower. Again, back to notes. Okay, could. No sign of it yet. Not even overbought. And back to bonds, nowhere near overbought, but still resistance could do the job. What about crude? heat unleaded. Crude got all the way down almost to the bottom of the support area and is now high and last, above the close of yesterday, and really not too far away from making it above yesterday's high. Unfortunately, we didn't get oversold, so I'm not going to get a bullish engulfing green ER buy signal, but I love the bullish engulfing if it happens in a support area with RSI pretty darn low. I mean, it didn't quite get there, but rules are rules. I think it's turning, and I think we're going to get a rally back toward these previous highs. Next, natural gas. Pretty much the same story, except it's almost at my minimum downside objective. So maybe we've got a little bit more to go down to 1968. That was a great year. And college years. So, that could happen first. We are 18 on the RSI. So basically, I have to say anytime now. This could turn around whether it gets to my minimum downside objective, which is so close for all practical purposes it's been reached, but not quite. And that's because of the double top that I've shown you all the way down. Unfortunately, one buy signal didn't work. We had a small loss on that damn thing, so that's not it. But this is about to come true. What about heating oil? Well, we did get oversold yesterday and today, and it is higher than yesterday's close. So we are up after a new low. That means that if we can get, and we haven't done it yet, get above yesterday's high, we'll have a very large bullish engulfing, which may or may not happen. Stopped out because there's our yellow STS stop right there, and we are still short from almost the high day. July 5th, red bearish engulfing ER sell signal in overbought conditions. Classic. It's been working great. I talk about it every day since, of course, the signal. And they don't all work. We had a little bit of a loss in here. Looks like we had a losing trade in there also. This was a whopper of a bearish signal and a great trade way back February of this year. A small loss on that one. I think a small loss on that as well. Sometimes they're huge, but the losses are meant to be, calculated to be. The stops are used for small losses, even though there might be 2 or 3 in a row. Next chart. Gold. Overbought around the previous tops of the market. Did make a new high for the whole trend for quite a long time in gold. Quite a long time. Years. I don't know, maybe even longer than that. But we're currently trading below yesterday's close, therefore, obviously, yesterday's high, and that is not a bullish sign. Now, it's not a reversal of any particular consequence. All I can say is I've seen many of these where you'd make a new high for the trend, and all of a sudden it would flip-flop and close badly, and then that would start a downside swing. I think we may be looking exactly at that right now. How low? Well, gold's gotten stuck sort of apparently in the sideways trading range that I thought was a double top formation, but it never broke out. It tried and it tried again. So here we are at a triple top, maybe. I don't know. I've been saying they're very, very rare, but what do you got? Heck, exactly the thing you would look for if it was going to be a triple. So I'm forced to forecast 230456 for my probable downside objective. Next chart is silver. Here we have in silver and platinum some very, very rare circumstances. I can't remember, and I'm going back decades and decades. I've seen a few, probably less than 10 of them, where you have a head and shoulder pattern inside of a head and shoulder pattern. Now, maybe my memory being correct, I've seen one where the head and shoulder top was the shoulder, first shoulder of a big pattern. A head and shoulder top was the head of the head and shoulder top big pattern. And believe it or not, oh, too bad, the last shoulder was not a head and shoulder top. That would be a triple inside a big one. But this one seems to be, so far today, a head and shoulder top is the last shoulder on the larger pattern that I've been talking about, the larger pattern for a few days. But when I saw that it couldn't make it, or it did make it a tick or two above yesterday's high, but at the same price. And all of a sudden, we're now lower than the last 2 weeks. I looked at this and I went, wait a minute. There's a rally high right there on July 5. And then we had a high on July 7, which was higher. But the rally high yesterday and today are about the same, and they're very close to the same price levels as the first shoulder, July 5th. Do I have a neckline? I sure do. I drew it across. It's slightly upward slanted, and it has broken out today, the same day the last shoulder is formed. That's how small this formation is. If you want to break it down into hourly charts, you could probably see a lot more detail. You would see a lot more detail. So the minimum downside objective on a small pattern, which has only taken about 2 weeks, is below the neckline of the big pattern. The large pattern, April 12th, is the first shoulder high. I marked that off weeks ago for you. It's a little double top. The top is ahead of the larger formation around May 24th, a couple days earlier and later. And here's the last shoulder, and it's a head and shoulder top by itself. Watch what I have to show you in platinum in a moment. It's going to be the same thing. Unbelievable. We'll see how these turn out. I would love for them to work great. They don't always. You have to follow your rules. Look for what's not supposed to happen. And if that doesn't happen, then it is doing what you expect it to do. So far, so good. If you play in the pattern, you're short from approximately 30.7. And, of course, low and last. For the moment. So the minimum downside objective on a small pattern is kind of not important because it triggers the bigger pattern. Wow, down to 2410. 2 different necklines involved, 2 different head and shoulders. Here's platinum. Oh my God, we got the same pattern combination. And I got a sell signal on the top of the market for platinum. Do I need to go in more description? No. Timing is excellent. Prices are excellent. I don't see anything wrong with these patterns of any consequence that they're not perfect, but 90% are perfect. Wow. Silver and platinum, watch the next few months if these patterns continue to develop properly. Okay, copper, coming down to support. No sign of bounce, not quite oversold. I think it's going to reach, the support area, going faster here a little bit. Beans got oversold. No downside progress since 2 days ago's lows and close. Tiny bit higher yesterday in the close, today sideways. It looks like it's losing downside momentum and starting to bottom out. Next. Oh, by the way, in beans, your rally should probably be up to about 1104.5, and it can't rule out 1140-ish. Oil, soybean oil. I'm not going to talk about the giant head and shoulder bottom today. I'm just looking at a market that got nothing going for it. Momentarily, we're neutral in the RSI. We came up close to resistance, got overbought, pulled down a little. We were close to oversold almost in a support area, and that was before it rallied. We're between a rock and a hard spot. I kind of need a close above, let's call it 50, and a close below 42.5, or something in the middle that I can grasp onto. Meal, sort of similar, except the double top in meal I've been talking about for a long time, and our downside objective of 325 is not too far away, and we made the lowest low for the move down yesterday. So there's nothing wrong with a little bounce here. It wouldn't go anywhere, I don't think, up to 340, 41, 2, 3. Yeah, that's about it. And then make new lows. So I'm still looking at meal coming down a little bit more. Now, if it does not hold at this support area, we will be starting to make new lows for a year and a half. Very, very bearish long term, which we have already on 3 out of 5 grains. When I say grains, I mean beans, oil, meal, corn, wheat. I don't look at oats. So sorry, oats. Now, This, I think, is going to do exactly that and be in a long-term bearish position, trading below 300. I'll give it another two weeks or something. Corn has already done that. It broke out to the downside. The big down day, classic breakout, was on June 28th. We got oversold quite a bit. We had a bullish engulfing that almost worked. It made a lower low the next day, so we did have a loss on the trade. But there wasn't any downside follow through, and we're getting a little bit of a rally. We could be bottoming out a little bit here. I would not be surprised to see a rally back up to approximately 425 or maybe up to 442. But this is a downside breakout for weeks now on a huge trading range for a couple of years. This is very, very bearish long term. I'm just going to eyeball this and tell you that I think it's possible it would go back down to 220. And we're at 397. Next chart. Wheat. I have to say, pretty much the same story. New lows a couple of days ago. Not 2 weeks ago like corn, but just a couple of days ago. But it's in the same situation. It's making new lows for multiple years. It tried to hold on, doing a pretty fair job. We got a buy signal smack dab on the low day on March 8th, and there was an excellent rally out of that. We got sell signals around the top, not quite. One false buy signal on the way down, but now support is broken a few days ago. Classically, big volume, big down days. Got oversold, so bouncing a little bit, it's no big deal. I'm sure I mentioned yesterday 555 for a little rally high, possibly. Excuse me. And I can't rule out, 590-ish. Okay, cattle. I don't know. They're just grazing along here, going sideways. We reached a little bit of a resistance area, but RSI is 57. This could meander, wander up a little bit more, maybe toward these highs again. That's the best I can say. If I don't have something which I hope is going to be right, shut the heck up. Hogs, a little surprising amount of strength here. We got oversold only for one day. A little bit of a common reversal, lower low, higher close. Working okay, though. In fact, yesterday on the close as well, a lot of strength and made a new high for looks like 3 weeks or something, 3 or 4. And today we've got a little bit more of a follow through. And the high is just testing the resistance area for the highs that were made in middle June. What do we got here? Yeah, middle June. So it could pull back a little. That would be a reasonable resistance level. I'll put a little resistance line in there for the moment. That's classic. But it remains to be seen whether it's going to start slipping. Don't really have anything profound. Let's go back to Bitcoin. So we did get on July 8th. I don't look at these charts very often. A bullish engulfing ER buy signal on Bitcoin after a large down gap in oversold condition, classic potential exhaustion gap, which I mentioned the same thing on another chart earlier. I forgot which one. I know the patterns. I don't remember the symbol that was involved. This is really weird, and I really can't call it what I'm about to call it. But this dividing line, this yellow line, separates all the price action before the line and after July 12th. That would mean this is an island. I don't think I've ever seen a 6-day island bottom. About as rare as a snowball in hell. This would qualify. Usually island bottoms are 1 or 2 days. Almost always. 3 are very rare, and even more, this never happens. So I'm questioning whether it's an island or not. Are we going to go back down and close the gap, and therefore it won't end up being an island? But so far, you got an eye on the bottom. So what's this going to do? First level resistance pretty much has already been reached. Next level resistance is going to be right about here, 2450. And above that, it gets more complicated. Yeah, and this low, this key reversal was in a nice spot. Heck, it closed an old breakaway gap back here. That is classic. That's a breakaway gap. 2020 hindsight. And I did get a sell signal pretty much on top of the market, by the way. So maybe I'll get a buy signal on the bottom. E-mini, what are we doing? Low and last. Oh my God, it's still sinking. While I was talking, new lows. We're getting close to some of these profound levels. I can't help it. This stuff is starting to fall. It looks like it could even accelerate. Profitable trading to you. Have a great day. This is an important day. Bye-bye.